Hi, I'm Vandana. I am the founder and CEO of Vandana Insights. We are a Singapore-based provider of global oil markets macro analysis. I have about 25 years experience looking at the oil markets, reporting, doing price assessments, analysis, and ultimately explaining the markets. That's what I enjoy doing the most.
I'm John Driscoll. I've been out here in Singapore since 1985 as working for a producer of light sweet crude, working for several refiners, also working for several trading companies, taking up Singapore citizenship. When I retired from trading in 2013, I started my own advisory business and really focus on teaching, training, limited business consulting, and also litigation support.
Right. So it's time for the weekly Energy Information Administration data tomorrow. We're recording this on a Tuesday. I'll be looking out for inventories as usual, how the crude and product stocks moved in the US on a weekly basis. I'll also be especially paying attention this time to US export figure.
You have to figure the exports from the US have been under pressure for several reasons.
Yes.
The macroeconomic headwinds, the cost of shipping.
The biggest one exactly has been the cost of shipping. It multiplied fourfold, fivefold between the space of a few weeks, the end of September, when US imposed sanctions against a major Chinese shipping company called COSCO and their units essentially. And that has made the freight between the US Gulf Coast and China go up, skyrocket is the word, several times in just a matter of days. The cost from US Gulf Coast to China, for instance, went up from about $4 a barrel for shipping crude on a VLCC to more than $10 a barrel. Surely Asian refiners can't afford to pay that much more.
No, they can't. This adds an extra penalty onto their, it basically takes the refining margin away. But look just in the last couple of months, the way the market has been whipsawed. Remember, we got the news of the drone attacks, Opcake, on a Saturday, and we are all geared up for an early Monday morning wild opening in Singapore, and we got that, and it fell back.
It was a wild opening.
Surged $10 a barrel, we fell back. All these expressed concerns about the vulnerability of Saudi infrastructure, they got stuff back up and running in record time. They seem to have resolved that. We had backwardated markets in the key benchmarks, Brent and WTI. Yet during that period, we started to see buildup of supplies. What have we got now? Close to 30 ships, floating storage units outside of port limit in Palapas, and you built inventories at a time when you would expect them to draw down inventories.
So when things like this happen, IMO 2020, the major reduction in the sulfur allowed in a bunker fuel, that's when we see these very interesting, unforeseen movements, sudden movements, changes, reversals in spread relationships, which is why IMO 2020 has become the center of focus for not just the bunker, the shipping industry and the fuel suppliers, but the refiners and even the crude producers.
Now it's blended low sulfur fuel oil, marine gas oil, ships equipped with scrubbers, LNG. So how are the cards going to fall? We'll cover all that. We'll look at the different scenarios.
And just as we guys are with you around the first week of December is when OPEC and non-OPEC producers are going to meet as well to decide what they want to do with their cuts or their production levels for 2020.
Well, then that leads to this discussion about cuts being implemented, and will they really take that step, and will it have the kind of effect? I think we can't expect to read what's going on in OPEC using the past templates.
And especially with the Aramco IPO coming up. Now, as an oil market participant or analyst, you do have to keep an eye on the IPO as well.
For a while, there was concern that this Opcake drone attack might blemish this reputation of supply reliability, but it seemed to have Houdini'd their way out of that one.
But I think it's slightly blemished, no matter what we think. I think that worry, whether it's with the buyers of crude from the Middle East or with the investors in Aramco IPO, I think that worry will remain. How secure are the shipments coming out of the Persian Gulf and the Red Sea?
For many years, a lot of the traders, we were focused on oil industry fundamentals, supply, demand, inventory, refinery runs, seasonal factors. We had this kind of tunnel vision. One thing I learned about 10 years ago was you got to look at the macro stuff. You have to look at things like the different asset classes, currencies, interest rates, even equity markets. You've got to try to gauge the mood, risk on, risk off. You've got to broaden your perspectives.
I look at gold as well.
Well, you don't get any interest on gold.
I look at gold because and especially since this entire trade war saga began, it has become a weather vane for what you call the risk appetite of investors.
I've never been a gold bug. I've always felt it's like a bomb shelter kind of investment.
Look, should you be looking at what the US Fed is doing with interest rates? Should you be looking at what is happening to gold prices? Should you be looking at what the US dollar is doing? I think you should. And I will love to share with you exactly why and how you connect those dots to what is happening in the oil market.
You've got Donald Trump barking at Jerome Powell about, hey, you're not following the script. You've got to cut interest rates. You've got to support my economic vision.
Right. So are you saying we go back to watching what Trump is tweeting in the end?
It's all going to come down to the U.S. election. If his or possibly even the impeachment process.
Right, so this is just the kind of understanding you need to have: the fundamentals, the financials, the Fed, Trump's tweets, what's happening to tanker rates, what's happening to IMO 2020, what's happening in the North Sea, what's happening to shipping and risk premium in the Middle East. And that's exactly what we will train you to analyze.
So let's lock and load and get ready. And this will be interactive. We expect to be thoroughly engaged. We want lively debate and discussion. There are no shortcuts or panaceas or silver bullets. We're gonna comb through and cull the data, the signals from markets, and we're going to come up with a few different approaches.
Right, so get your thinking caps with you and get ready. We certainly are.
Lock and load.